Hey there, Ed McCormack here, founder of the crypto education platform, DChain. Before we start today's video, if you haven't already, please subscribe to this channel, pound that like button. I know you're probably sick of hearing me say that week after week, but all the support that viewers like yourself have given have really helped us grow this channel, slow and steady, and we really appreciate it. So with that being said, what we're going to be talking about today is a token that not only has become a favorite for some of the smartest traders in the crypto space, but also some of the smartest funds. And the reason being is it's creating a whole new subsector of DeFi that is really catching this blockchain space on fire. And if you're asking, what are we talking about? Look no further than Alchemix. We're going to talk all about it now. So, talking about the overall lending and borrowing space within DeFi, it's almost impossible to name all the new platforms that continue to come out, whether you're talking about Aave and Compound on Ethereum, or Anchor and Mirror on the Terra ecosystem, all the way through all the endless amounts of platforms that are rolling out on Avalanche, on Solana, on Cosmos, etc. So it becomes a bit of a situation where there's a bit of a copycat scenario where there's many different lending platforms, all of which are hard to differentiate each other, except the blockchain that they're based upon. But the one commonality that they seemingly all have is that when you decide that you want to take out a loan, at the end of the day, you need to make sure that you're putting in a certain asset, usually a stablecoin or a large cap cryptocurrency like Bitcoin or Ethereum, and ultimately managing your loan to value ratio based on the amount of money that you want to take out. So for example, if you went on Aave, you know that if you want to take out an $8,000 loan, you need to put out $10,000 on USDC because they have an 80% LTV ratio. What happens if you go above that, and some of these platforms, they give you a little bit of a buffer. So once you just eclipse that LTV ratio, you're not getting liquidated. But ultimately, if you do go above whatever that percentage is, what happens is that lending platform will do a process called liquidation, which just means that they will essentially close out that loan. They keep your collateral, knowing if they lent you $8,000, they're still holding 10, so they're always on the positive side, and you lose your funds. Now, this is something that nobody wants to happen, but at the end of the day, it often happens, time and time again. And one of the big reasons is, for one, it's very difficult to constantly manage that LTV ratio if you're using a large cap, and it's susceptible to big swings. Think back to the last year where Ethereum and Bitcoin had pullbacks in their overall price going all the way up to 50-60%. Now, if you are using Bitcoin as a collateral asset for a loan and it went back 60%, you would be in serious trouble because you then need to come up with more money to use as collateral so that your loan doesn't liquidate and that lending platform doesn't take your money. And this is where Alchemix comes in. Alchemix is a lending platform built on Ethereum that is centered around the idea that you are going to be given your loan that will ultimately repay itself over time. Now, let me explain how that works. Essentially, when you go on any other DeFi platform and you put any asset down, you will earn interest over time. Now, what Alchemix does is it flips it on its head. Rather than waiting for that time to elapse before you're given that amount of money, they are going to provide you that value up front. So it's essentially, it's providing you the future value of your yield. So for example, if you decide that you want to take out $10,000, what will happen is that you will put down $10,000 in DAI or one of the other supported currencies on Alchemix. You were then given ALUSD, which is their default stablecoin that they issue, which you can then turn into DAI or Ethereum or whatever asset you want. And then over time, that DAI that you deposited will earn interest where that interest just goes to then pay the loan off. So essentially, you are given a loan which will pay itself off over time, and you don't have to worry about constantly monitoring the total, the loan to value ratio. You don't have to worry about, paying all the gas fees. One of the big issues that a lot of people face, especially with platforms like Compound and Aave, which live on Ethereum, is that, if there is a massive and fast and unexpected price pullback, that they could then be faced with a scenario where you might have to pay astronomical gas fees in order to get your money onto the platform. And you're at the same time hoping that you're going to be able to get your money onto the platform before liquidation occurs. That's not the case here, because your money is already locked up on Alchemix, and Alchemix is just auto applying your interest rate. It's something you don't have to worry as much about. And on top of that, any instance where you might need to sell assets in order to provide additional collateral, you are avoiding a scenario where there's a taxable event. Anytime you sell an asset in cryptocurrency, it is a taxable event. You are then responsible for reporting that to your local tax authorities and ultimately paying whatever taxes are owed, whether it's standard income, capital gains, or perhaps something different. Alchemix fixes all of that. And really, because of this idea that it's basically free money that it's giving to people, that you are getting the value of an asset that we can expect will appreciate over time. And ultimately, you're being given the sort of the benefit of the doubt that you're going to benefit and sort of be on the positive end of that price appreciation over time. So with that being said, it's no surprise to see that some of the biggest funds out there are starting to buy this token up on Uniswap, on SushiSwap, on 1inch. And if you're interested in looking at it, and just for disclaimer purposes, I did not and have not bought ALCX, knowing that I was going to produce this video within the last 2 weeks. And I'm going to hold off for at least another week to ensure that any viewers who are interested in this token are not in a position where I'm going to financially benefit from you getting into a project. The idea of this channel is to give you suggestions and ideas that can hopefully make you money, not for me to benefit financially off of you. If you're interested in it, check it out. It's ALCX, one of the most talked about projects out there. If you look at the financials, as of the filming of this, it's roughly about $373. The price doesn't matter as much as when you start to look at some of the other metrics in there, such as your market cap over your total value locked, meaning how is this platform being valued over the amount of funds that are currently locked up in smart contracts. And usually you want to see a project really not go over a 1. That's where things get a little bit subjective in terms of, is this going to be a platform that's going to hold value over time? What we're seeing here is that it's a 0.24. So it has a lot of room for growth. And that's where this project, being one of those small to medium-sized gems out there, could be worth checking out and potentially adding to your portfolio. So I hope you enjoyed this video. And if you did, again, pound that like button, share with your friends, and until next time, happy and safe investing. I'll speak with you soon.